Right, hello everyone. Quickly take a look at some markets. We'll take a look at the ES, crude, and gold. We'll take a look at daily on down. So the higher time frame, lower time frame. And before I do that, I'll just show you basically what the idea here is. So you have a market and it's rallying and pulling back, rallying and pulling back. Sometimes you have simple corrections, sometimes you have complex corrections. But the idea is you have rallies, you have trend, that's your trend. You have rallies and pullbacks. Right, you have rally, you just put a P for pullback, rally, pullback, rally, pullback. So you have one, trend, two, rally, three, pullback, right? So the idea here is when the market, you're basically doing one of two things, and that's, you're buying the breakouts or buying the pullbacks. Majority of a lot of the trading strategies are either buying on the up wave or buying on the way down on the pullback. So we'll just focus on pullback trades. The idea is when the market rallies and pulls back, we go to lower time frames and look for buying pressure. Look for buying pressure on the bull pullbacks or selling pressure on the bear pullbacks. So it's just rally, pullback, rally, pullback. As it pulls back, is there buying pressure? The question is, when there's a trend with a rally and it pulls back, on the pullback, is there buying pressure? Yes or no? If there is buying pressure, that means someone is buying the pullback, and if you want to join them, that's our decision to make. Same thing in the downtrend. There's rallies down, pullbacks, rally down, bear pullback, rally down, bear pullback. And on the pullback, we're seeing if there's selling pressure on the lower time frames and making a decision if there is. So the pullbacks are where we do the analysis to see if there's buying pressure on lower time frames. So you have rally, pullback. Let's take a look and examine the pullback, seeing if there's buying pressure, and if so, it offers an opportunity. All right. The second thing is when a market pulls back on a higher time frame, it looks like a swing. On a lower time frame, it looks like this, an entire trend. And that trend typically weakens as it's pulling back with a shortening of the thrust or some type of exhaustion maneuver. It's typically climactic or a shortening of the thrust. I think it's shortening of thrust most of the time. And this registers as momentum diversions. And the reason is a shortening of the thrust is basically the shortening of distance over time from high to high or low to low. And that's the same as any momentum indicator in terms of they measure distance over time. So that's why when there's a shortening of the thrust, there's typically a diversion. So as the pullback occurs, we go to lower time frame, we typically see shortening of the thrust, which registers as a momentum diversion. And then you have buying pressure comes in, which you can call your change of behavior or your sign of strength. Okay? So you have a rally, it pulls back, that pullback looks like a trend. That trend, as it pulls back, will have shortening of the thrust, meaning the lack of progress from low to low to low, or a momentum diversion because they're so correlated. When you have one, you have the other. and then after that buyers step in with buying pressure. This is your buying pressure, which means someone is buying the pullback. And then we decide whether we want to get in. All right? What the error that usually people make is, they see a rally and automatically say, I want to buy a percentage level, like, I don't know, like 50% or 38% or 68%. I guess it's not an error, but there's no evidence of buying pressure. If you use the higher time frames, it can just do this. And you'll get entry here and stopped out here. So this is why we use 2 time frames to see on the pullback at that level, we have buying pressure in terms of a change of behavior right there that can initiate the uptrend. So I'll just show this, anyway. All right, let's look at gold. We'll take a look at the pullback on gold and Bitcoin and crude and ES. So let's start with the ES. So the market was rallying and pulled back, rally, pull back. This was a crappy rally, but a rally nonetheless, and then it broke down and rallied on the downside on the biggest down wave in 10 waves with 2.4 times average down volume, I think, and it pulled back here to 6108. As it pulls back, what did I just explain? What do we look for? Selling pressure, right? So rally up. When it pulls back, what do we look for? Buying pressure. Rally down, what do we look for? Selling pressure. On the pullback. It could be a pullback, it could be an ABC pullback, it could be a spring pullback, it could be whatever. Simple or complex pullback. But that's what we're looking for, So rally down, pulls back to 6108. As it does this, you have a shortening of the thrust right here. Right? It makes this little higher high, slightly above the prior high, and from that you have your selling pressure on that pullback. You have your selling pressure right there. That's it. Market rallies down, hits the pullback. We see as it pulls back, it weakens, and we find that it's actually climactic over here. You had the exhaustion climax right there, because this was the biggest buying wave in 18 up waves. After that, they just exhausted and had a shortening of the thrust, which is just another. There are 2 types of exhaustions. First is the climax, and the second is the shortening of the thrust. Both are evidences of exhaustion. Why? Because the buyers are exhausted. They can't go higher. In the climax, they exhausted doing the climax. And shortening of the thrust, they just can't buy anymore. They're very sluggish in the buying activity. But both are evidence of exhaustion. All right, so exhausted and then crack. Right here, there's the selling pressure. So market rallied down, pulled back. We see the pullback. There's some weakness on the left-hand side, diversions. And bank, selling pressure, So this is an example of what I just explained. Here on crude, you had a little move. It tagged this high, and then you had that selling pressure come in and go down, making a slightly lower low, And then from that area, you have buyers coming in, rallying, and hitting the pullback. And how would you know whether you want to buy the pullback or whether strong hands are buying the pullbacks? You'd have to go to lower time frames to see if they step in on the pullback. Right? Let's take another look at another example here. You have a down rally in gold, and you have pullback 1, pullback 2, and then you have this break of this low at 2630. So we want to examine this to show that sometimes you have that double trading opportunity. All right, so first we'll take a look at the bearish pullback. We'll just take a look at this one, 2761. All right, the second pullback here. So you have the rally down, hit the first pullback, hit the second pullback. What happened on the second pullback at 2761? So it was going up and up and up. Here's the exhaustion climax right here with the biggest buying in 49 up waves. After that, it's in a pullback, bearish pullback. What are you looking for? Selling pressure. There it is, bank, right there. That changed the trend on this time frame. So you have the rally down, hits the pullback, selling pressure coming in on the pullback, market's going down. Why? It means someone is selling the pullback. Hit, rally down, pull back, sell the pullback, we go down. As it's going down, it breaks this low of 2630. As it breaks 2630, they're not ready to, continue down. So what do? As it gets into this, this is your selling climax, where it gets into that oversold position and breaks this low, they buy it. Right there. 2.6 times average up volume, biggest in 8 waves. And that initiates what seems to be possible third pullback leg. There's something going on over here. Right? So, what I wanted to show was the rally and the pullback. Selling pressure on the pullback. Goes down. All right. Now we'll take a look at Bitcoin. Bitcoin is interesting because you have a rally and then you have pullbacks, but there's no buying pressure. So you have this level, this level, this level, right? But I guess it didn't pull back enough, So, you have us as the thrust was shortening, sellers came in. Right there. That's your, maybe I should, what I do. All right. So you had that selling at the highs, which stops the move from going higher. And you have pullback positions, but there's not enough demand. So it's going to find demand somewhere, but I guess you have all this space to fill. All right. So once again, you have rally, pullback, rally, pullback, rally, pullback, rally, pullback. On the pullback, we look for buying pressure. On bear pullbacks, we look for selling pressure. And that's all. That's all, folks. Have a good week and happy holidays. Happy New Year.